G'day there, welcome to the week ahead with Pivot Trader. Today I'm going to have a look at Bitcoin. I did have a look at Bitcoin a few months ago for you and was saying that the price was heading up into resistance, and I sort of gave you a pretty detailed look at what I was seeing and where I thought the selling pressure could come in. And we have seen some selling pressure in the last few weeks in Bitcoin. So I just wanted to recap what I said to you at the time and show you where things are at now to understand why I think Bitcoin could see some more selling pressure ahead. So to start off, I thought I would actually show you the video as it was sent to you on the 16th of August, just the major part of it, to show you the key levels that I spoke about, and then we'll go from there. So here is what I said back on the 16th of August.
So the risk is just higher now that we have this monthly sell pivot in place, that this rally could end up meeting some pretty stiff selling pressure before another retest to the downside. And just looking at the whole wave, obviously we've got the sell zone of that whole wave coming in there around 49, let's say 50,000. You can see there as the bottom of the sell zone, and the top of the sell zone, look, it's a very wide range because it was just a massive wave higher, up around 57,000. So based on the monthly sell pivot, there's an area sort of within that range that's probably the highest risk zone, around sort of 52 to 55,000.
So there you can see with a quick overview of what I said in that video a few months ago. It was based on looking at the fact that we had this huge wave to the upside and a retest of the point of control, which was around 30 odd thousand. And then we've got the buying pressure came out of there. But I was saying at the time it was heading up into what would be selling pressure. And the key level I gave you was around that 52 to 55,000, which was based on the monthly sell pivot. And if we look at the actual price action that ended up happening, you can see that the high of the move came in there pretty much bang on that level that I was speaking about. And the high there, 52,888, was the high of the move. And the key zone I gave you was 52 to 55,000, where I thought selling pressure should be present. So that really has happened. We did get a nice continued rally into that zone, but then last week the music stopped, and the selling pressure that I thought should be up in that area has been proven to be there. Now it's still early days and it's a very volatile contract, there's no doubt about that, but I just wanted to make the point today that I've had a few boxes ticked there with Bitcoin really seeing that selling pressure. So there's just a bit of an added risk now that we could see a bit of a sell-off over the next few months back towards that point of control around 34,000, which is a long way down from where we are now. What I was saying at the time when it was heading up into that zone was this is probably the time to be taking a bit of money off the table, not necessarily getting out of Bitcoin, but if you'd been making money on the way up, it's not a bad spot to take a bit of money off the table and give yourself a really strong position. So we haven't had the weekly sell pivot yet, so that's still to come. And with the weekly chart here, you can see prices marching higher. The high of the move was last week, and that's been a very big sell-off on the week with a low around 42,000. But we do need to see a weekly close below that low. Perhaps this week, perhaps it'll take a month for that to happen. But once that happens, that just confirms that move that we are starting to see a pretty strong momentum to the downside. And yeah, my target back towards that 33,000, I think, would be increasing as a risk. Also, just moving on to nickel quickly. We've been following this for the last few months, and I've been saying I think it could even accelerate to the upside once it breaks out above these major highs. And it has done that now. But look, it's a very high-risk zone when prices do break out to new highs, because as you can see there, the false break is something that happens so often. So we may be in for another mean reverting event before prices are ready to keep heading higher. But we are just getting to a point where I think nickel could be ready for quite a sustained rally to the upside. And as it's standing now, breaking out to new highs, this is as good a chance as any to see some real strength come in. I guess if we see the false break and a weekly sell pivot, then it's just not ready, and might need to consolidate for a bit more below $18. But for now, looking really good, and I'll be interested to see whether it can sustain prices above this $19 level. Gold is probably the one that I'm most nervous about. It really is a very tricky chart for gold. It feels like a bit of no man's land where it is right now. This is just a weekly chart, and I have spoken about gold in the past with this strong rally that we've seen over the last few years, a nice steady uptrend there. And that is still intact. We'd actually need to see prices break below the lowest high in that trend on that weekly chart, and that's all the way down below $1,500. So the uptrend still well and truly intact, but we have had a correction that's been going on, and that correction is still intact as well. So this is where it feels a bit like no man's land. When you look at that downtrend, that's all still intact, and we actually need to see prices, heading above the lowest high in the downtrend, and that's up around 1960. So it really is a state of being caught in this area between the buying and selling forces. And look, maybe we're in for a bit of a dodgy old time in gold, where it looks good, then looks bad, and ends up going nowhere over a long time frame. But last week's sell-off, it's just created a weekly sell pivot, which I didn't really want to see. I wanted to see a bit of strength once it recovered from the selling pressure that we saw a few weeks ago. The low from a few months ago is quite important for me for future direction. If things tip over, breaks back below that sort of 1670 area, I think it could have a bit of a sharp move to the downside. So that's not that far away. It's only a few bad nights trading, and the gold price could look fairly ordinary. But I'm going to stick with it for now, that I think it could look pretty good pretty quickly if it can head back above that sort of 1840 area. But it really is a bit of a flip of the coin in gold right now, which way it goes. I think interest rates are the thing to watch over the next few months, with a huge infrastructure bill, massive stimulus coming from the US. That's going to be multi-trillion dollars. Inflation's already picking up, PPI figures already really high. So what effect does that have on inflation and interest rates? Tapering is expected to come before the stimulus kicks in. So watching the bonds in the US is going to be very important over this next few months. And is gold getting a little nervous about that, wondering about what rates might do? And a big spike in rates, well, you might just see this thing tip over. And I am a bit wary of that in gold. You can see on the monthly chart here, the 10-month exponential is getting pretty close to that 20-month simple. And that is just the long-term trend. They can give lots of dummies, these things, but it's been pretty good over a long time frame, especially in gold, of giving you a sense of what the long-term trends are. You'll see if we go all this way back, back to 2000, the long-term trend shifted to up in late 2001, 2002, and you didn't actually get the shift in trend until there, the moment when it really did sell off to the downside. And then you've got a little dummy there, but turned back into an uptrend here, and we've had a nice good run. So, if that trend does turn down, and that would happen, I think, certainly if prices do bust back below that sort of 1670 level, it does just look like a bigger correction's on the way. And I have said in the past, you can have quite large sell-offs once you have sort of a major false break of multi-year levels, that being the 2011 all-time high. So even if, very long-term gold is heading higher in a big way, that doesn't mean it can't correct over the next year or so before turning back up. So it is sort of touch and go in gold. I'd like to see some strength come in quite soon to give that sense that the current monthly uptrend on the candlesticks is intact. It's a bit of a tough one in gold, so I don't want to stick my neck out too far to get it chopped off. All right, well, that's enough for today. I'll come back with more next week. Cheers.